Part of the questions I know people ask, what is a premium? Can we break it down?
Premium is an amount of money an individual pays to be covered for. It could be for his life, it could be for his property.
And that payment is it monthly, annually, or?
Yes, it's subject to the kind of policy you are buying. For example, if this your studio's value is 2 million naira, the sum assured of the studio now is just 2 million naira.
Okay, and then what will be the premium?
Now the premium is subject to what you are buying. Mind you that the sum assured is not going to be given to you. What we're giving to you is your capital. Now the capital of 10 million naira, which is what you have.
But if I'm paying 500,000 in 1 year, that's 1 million. In 10 years, that's 10 million.
10 million.
So where's the interest on it?
Thank you.
Last week, I talked about how you can use insurance to protect your wealth and how you can use that to hedge against losses. We talked about fire and burglary and how that can really help you to even insure as small as your phones. This week, we will continue that conversation. Hello, Your Excellency. It's the Money Mindset with Razak. How are you? Hope you're good. How is the weekend? What's the economy like at your end? How is the weather? Cold? Hot? I don't know, depending on where you're watching from. I've got my guest in the room, in person of Mr. Frederick. How are you doing?
Fine. Good afternoon, Razak. It's a pleasure to be with you.
Yeah.
Good afternoon, listeners.
Thank you very, very much. So, guys, Frederick, let's start again. Last time we talked about fire and theft, we used an assumption of 2 million and how somebody will pay almost around 30,000 to pay insurance. Before we start going, I think some people, part of the questions I know people ask, what is a premium? Because oftentimes we use premium, sum assured. Can we break it down?
All right. Thank you for this opportunity. Premium is an amount of money an individual pays to be covered for. It could be for his life, it could be for his property. But basically, a premium is what an individual pays for an insurance, to receive an insurance cover.
And that payment is it monthly, annually, or?
Yes, it's subject to the kind of policy you are buying.
Okay.
It may be monthly, quarterly, half yearly, or yearly.
When you say policy, that means the types of insurance, the products.
Yes. Yeah, policy is that product, the type of insurance
people
you're buying.
know.
Yeah.
Okay.
And then you ask another question.
Sum assured.
Sum assured, okay. Sum assured is the value an insurance company places on the product or your life. If it is in terms of life insurance policy, is the value an insurance company places on you. Then if it is property, is the value an insurance company places on that property. For example, if this structure, if this your studio's value is 2 million naira,
yes,
then the sum assured of the studio now is just 2 million naira.
Okay, and then what will be the premium?
Now the premium is subject to what you are buying. Let's assume that you are buying fire, which means the maximum the insurance company will charge you for fire is 1%. So what is 1%?
And it could be lesser.
Yes, it can be lesser. Yes, subject to negotiations, risk location, risk assessment, and the rest of that.
Okay.
You understand?
So let's use 1% as a bet.
And let's just use that's the highest. It could be 0.85, 0.45, subject to just negotiations, but the maximum is 1% already.
Okay.
Now, if this building worth 10 million naira, for example, and then we come to insure it, we charge you 1% of this building. So once that would be 1% of 10 million, that would be 100,000. So once you give us 100,000 naira, we now promise, we now tell you that if there's any damage on the house, 100% damage on the building, we are coming to pay you 10 million naira. So that 10 million naira is the value the insurance company placed. So that is what is called the sum assured. So the sum assured is the value the insurance company is going to pay you if there's a claim.
Okay. So sum assured is the 10 million naira.
Yes, of the value.
Of the value.
Yes.
Okay. And so it means if the premium I'll be paying would be 100,000 naira, that is assuming what the percentage is 1%. And like you've said, it could be lesser, right?
Yes.
Subject to negotiation.
Yes.
Okay. Because I know, for example, I've done something similar and I've seen as low as 0.1%, 0.3%. Again, like you've said, it's subject to the insurance company that you are dealing, negotiating with.
Yes.
Now, somebody sent in a question.
All right.
And the person dropped that as a voice note.
Okay.
It's more of, I mean, if you listen to it very well, someone who has worked for 60 years, built a house, and suddenly the house gets burnt. I'm sure you will agree with me that with this fire and theft, fire insurance, if the person have done into the house, the person would have been safe. And even if you are making rent from that house and you are taking the amount of insurance out of the house, maybe even one of the flat out of the 3 flat will pay that insurance. Yes. That would have really helped the person.
Very well.
But let's now go to other products like education, insurance. How does that work?
Okay. Basically, education insurance is an investment policy.
Mm-hmm.
Investment and a protection policy. I will explain the two concepts. It's an investment because you do it and have interest at the end of the day.
Okay.
It's a protection because when the policyholder demises, that is the father, the insurance company continues the payment of school fees for the child. So that's where it comes to that is the protection aspect of it. At least the child's education is still intact, even though the parents are no more there. You understand? So it protects at least the child's education.
Okay.
And then it's an investment because at least
the profit, interest
you have interest.
Okay, so let's do it like this.
All right.
That lady who is watching us right now, you, I know you want to do something on education insurance for the child. So what should be the basis? I know from a personal finance perspective, what we always advise is that, for example, your child is 1 year old, but you're still working and you really want to invest in advance, like you talked, that by the time my child is 10 years old, he or she will be in secondary school. How much will I need to send this child to finalize his secondary school education, depending on your location, right?
Yes.
So let's assume somebody who is watching us right now is living in, let's say, Plateau State. And then averagely, the person assumed that at least every year in my area, I can still send my child to school with 300,000, meaning 3 times in a year. With 1 million, I should still send this child to school. If I do that for 6 years, even though school fee increased, that would be about 6 million. But because inflation and all the factors, let me budget 10 million naira for this child's secondary school. If that is what the person wants as a sum assured, like you've said, how much do you think the person will need to kind of contribute? And I mean, if the person is doing that, for example, let's say he or she is in his or her 30s, and probably want to do that in the next 10 years.
All right. If I get you right, you said, assuming the person is 30, he needs a sum assured of 10 million, and then the person is anticipating Nigeria, and there's any of the universities in Nigeria, schools in Nigeria. Okay, so the summary of your question is, how much do I think the person will be paying?
Yes, maybe annually or 2 times in a year.
Okay. Let's use one. Let's say 2 times in a year.
Okay.
Okay. So such person will be paying around You say for 10 years, period of 10 years?
Yes.
Okay. So such person will be paying around 4 to 500,000. Let's say 500,000.
But if I'm paying 500,000
Yes.
in 1 year, that's 1 million. In
Yes.
10 years, that's 10 million.
10 million, yes.
So where's the interest on it?
Thank you. The principal is what you are paying, basically. Is there for you. And then at the expiration, that is at the 10th year, when the policy has matured, the interest would have accrued, which means your payment is already 10 million. Your sum assured is another 10 million. That's already 20 million. But mind you that the sum assured is not going to be given to you. What we're giving to you is your capital. Now, the capital of 10 million naira, which is what you have contributed, will yield interest on its own.
Okay.
So at the expiration of the policy, mind you, your capital, your investment was 10 million. So at the end of the day, possibly you would have had another 2 to 3 million naira interest
On
that 10 million, which means you're already going with 13 million naira.
Okay. So it's important we put this out for people who are listening to us.
All right.
That as much as education insurance is going to do that, the whole essence is in an eventuality anything happened during that period. Beyond, even if you have only contributed, let's say 2 million,
yes,
it means the insurance will still give you the sum assured.
Yes, see how it works.
Okay.
Basically, when you start insurance policy, if I contributed there's what they call cool-off period. That is the 3 months grace. Okay, so within that 3 months grace, if there's no claim, and then in the 4th month, the person dies, first, the insurance company will be paying on behalf of the policyholder till the policy matures. So let's assume that I take a policy and after 4 or 5 months, I am no more. Insurance company will automatically continue the payment without me.
Okay.
And then the policy will go to the end. So if I was meant to get 13 million, interest of 3 million naira at the end of the policy, it means after the insurance company has contributed the capital, and at the expiration, they will bring back the capital plus the interest and give to my named beneficiary. And then the sum assured that was initiated will be used in paying my child's school fees.
Amazing.
Yes.
So I'm sure you can see how benefit this is. For many people who don't know. We've talked about education insurance. Let's talk a bit about life insurance, individual or group life insurance. What's the benefit for people?
Okay. Let's start with group life.
Okay.
Basically, group life is a policy that is statutory, that's allowed by law. And for group life, it has to be a minimum of 3 individuals.
Okay, so I can do it for my family?
Yes. Now, this is how it works. It can be taken by members of an association,
okay,
an organization, NGOs, family,
clubs,
even
churches,
market associations, just name it.
As long as what's the age limit of the people?
The age limit, the minimum age entry limit is 18, and the exit is 65. However, if there are people who are above that, but they need to be part of it, they will now approach the insurance company with the age. So the insurance company will now consider certain underwriting factors and then grant them cover. So that doesn't mean, it means that even if you are above 65, you can still be insured on group life. However, there will be special underwriting consideration for you.
Okay, let's take it for people who are watching now.
All right.
I belong to a club of 10 men.
Yes.
And for example, we are all in our 40s or 50s.
Yes.
So if we want to do this group life insurance,
yes,
it means we'll be paying. Yes. And then what's the benefit? Is it that when anybody among us died, the insurance will pay to that, will pay the sum assured?
Yes. The core essence of this is to reduce the burden that a demise of any of the members could have, yes, to members of that association. So if we're taking an organization and then we need to like help ourselves, the best we can do is to take a group life for ourselves. So when a one dies, when life happens, people, instead of taxing yourselves, you just approach the insurance company that one of us is no more. So the insurance company will not pay on behalf of the organization. So you don't need to put us in your pocket. So and the premium is actually very small.
And it's very small. So it's good to do group life insurance.
Yes, it's very, very good.
Let's now start wrapping up quickly. Okay. What are those factors people should consider in terms of when they are making choice, regardless of the product? I mean, I know I've heard from insurance about age, is it gender, is it the frequency of payment? What are those factors people should consider that you think from an expert you should guide people?
Okay, basically it depends on the kind of product, life product you're buying, but the factors are almost the same. One, your age, your income.
What do you talk about when you say age? Does it like it's good for older people or more younger people?
Okay, it's good for everybody. It's good for everybody. But now, when I said age, is because in most cases, in most insurance, life insurance products,
or other products too.
In other products, age does not play any factor.
Okay, so if I'm doing an education insurance for my child and even I'm 40 or 50, it does not have any effect on the premium.
Education insurance is a life product.
Oh, okay.
Yes, education insurance is a life product.
Okay.
So basically, when it comes to things like fire, that's where you don't have things like. But when it is things like education plan, let's say it is.
It's coverage for human being, not for material things.
Material things, yeah. Once it's life, once human, then that's when you have to. There are factors like life. I mean, age. You are bound, income bound. The period you are looking at, and sometimes the frequency of payment.
Please advise people when it comes to frequency of payment. When people want to choose product, is it good to do monthly? Because a lot of people don't understand that sometimes it's better to do a quarter or much more better even when you're doing biannual and annual rather than the monthly frequency.
Yes, this flexibility is subject to how the individual gets his money. So if I'm someone who gets my money daily, then I wouldn't mind paying every month. But if I'm someone who is being paid maybe after like 2-3 months before I receive salary, then I can make it quarterly. So it depends on how my income comes in.
Me, I advise people particularly.
Yes.
Yeah, and you who are listening to me, in my opinion, I do a lot of insurance, but sometimes even though I earn monthly, I can decide to keep the money with me every month and then pay to insurance every 6 months. Is that not fair?
Well, but look at the disadvantage. Where it could be like that for some people, just like you are in your case. Yeah. However, let's look at this scenario. Where you keep it, but before the 6 months, if there's something that comes up and then the money is no more.
That is for those who don't have financial discipline.
Well, that's why I say it depends on the individual's income.
Oh, okay.
Income and how your financial discipline.
Okay, so it's good to do monthly, but it is better to do quarterly or biannually or annually. Correct me. I use the word.
No, it's good to do
better, best. Correct me.
Okay, now the best to do is monthly.
The best
to do is monthly. So as the money is coming in, you pay. So you don't default. However, just like I said earlier, individuals' income differs. Some people are being paid based on intervals. So some people tell you that to pay after 3 months is better. Some people are being paid sometimes at the end. Okay, they get lump sum at the end of the year. So they will prefer that, okay, at the end of the year, when I get the lump sum, I'll move it to that policy. So it depends on how much individuals.
Yeah, but what about the implication on premium? Does it not have implication on premium?
Okay, now, before the inception of any policy in insurance company, there's always a duration where if you don't pay, it will lapse. Yeah, it will lapse. So if you choose to be paying monthly, they'll give you a grace. Okay, say your grace as a monthly customer will be 1 week. If you choose to be paying quarterly, they may give you a grace. Okay, your grace like 2 weeks.
And
annually. So they will give you like that. So it depends on what the insurance company chooses. And you, the policy holder, feels convenient. Comfortable with.
Like you said, the convenience of you watching really matters. Exactly. But where you can, from many advice and insurance experts, where you can
Yes, we can.
do a biannual and annual, it
More-
reduces better and it gives you a better offer.
Exactly.
Having said that, and the last bit, what would you tell the people who are watching today who are still, should I not? Now they've heard of different insurance products, group life insurance, fire, car insurance. In fact, quickly, let's talk about the car insurance.
Okay.
A lot of time people don't know that your third-party insurance, everybody have third-party, right?
Yes.
But not everybody have comprehensive car insurance. But yet people still use car to hit somebody and they don't take advantage of the third-party insurance. Can you talk about that?
Okay. People ordinarily, I will, by statutorily, is the third-party insurance is what every Nigerian should have. But economically, it's best or better to buy a comprehensive insurance for your vehicle.
I'm just looking at those who are the lower cadre. People, public transport, they have third party, and yet they hit somebody's car and they don't even know they can benefit. And even people, private owners, that a third party vehicle hit, you still carry the vehicle and leave and then take it to mechanic, not knowing that you can take advantage of the third party. Even if it is a public bus downfall that hit your vehicle, I'm sure an average public transport has third party insurance.
Yes, basically, that is the work of the relationship officers.
Please educate my people.
That is the.
I want you to educate the people watching.
I'm talking to your people.
Yeah.
They will enjoy it. This is the work of the relationship officers in the insurance sector. They are meant to tell every insurance you have. For there is third party insurance you have is beneficial. It's supposed to cover you to the tune of minimum of 1 million naira to 3 million.
Okay.
Which means that if your car hits, if you have a third party and you hit somebody, the insurance company is supposed to come here and fix that person's car up to the tune of between the minimum to the maximum of 3 million naira.
Okay, let's
put today, because insurance third party used to be 5%, but as of today it's 15%. Okay. 15,000 used to be 5,000, but as of today it's 15,000 naira. Yeah. And the cover is now 3 million naira maximum.
Okay, but it's good to just let people know. Third party means the car you hit. That is, you hit somebody's car and that person's car is faulty. That is what third party covers.
Yes.
And like
sorry, please briefly 1 second. Third party covers the person whom you have or hit his car.
Good.
So whenever that happens, for my listeners out there, every time if you have a third party and hit somebody's car, stand there and call the insurance company to come and take charge of the repairs. You are not supposed to repair it if you have a third party on your car.
And nobody would own a car and doesn't have at least the minimum
of third party. Yes.
That's amazing. I hope this really educates you, because the whole essence of the money mindset with Razak is to help you make money, manage money, and multiply money. At this presence, I want you to say last word to the viewers who are watching us out there as we wrap up the show.
Okay, thank you, viewers. Thank you, Mr. Razak. It's important that you visit insurance companies to pick up an insurance policy for yourself, to protect yourself and the loved ones. And then for those of you who have third party, please make sure that if there's an accident, you call the insurance company to fix it up. Please, for your houses, make sure you have a fire insurance, at least household insurance, but fire and burglary. Have all these things for your company, for your house. It helps a lot. And their insurance is free. It pays claim as against what was perceived before now. Insurance pays claims. So please, it's important you get this at the back of your mind and make insurance the next choice after your breakfast.
Thank you very much, Mr. Frederick. Insurance is not for the wealthy. You can also take advantage of it. Hello, Your Excellency. Hit the subscribe, like, comment, and share. I hope you enjoyed this session. Bye for now and enjoy the rest of your day.